Hello and welcome back to Talking Markets. Today we're joined again by Adam Linton, Senior Market Analyst at Newsquawk. Thanks for joining us again, Adam.
It's good to be back.
So we've got the CPI print today at the day of filming. Yep. What's the latest with the FOMC and how do you think it could play out over the rest of the year?
Yeah, so just in terms of kind of the policy journey we've been on with the Fed over the past few months since I was last on here. So June, we saw the Fed skip hiking interest rates, but at the same time they delivered a relatively hawkish set of dot plots which envisaged 2 more 25 basis point rate hikes this year. We got one of those in July, but for now the market thinks that FOMC is done when it comes to hiking interest rates. And a big part of that was the June CPI report, which served as quite a bit of an inflection point for the market. So you saw a pullback in the headline rate from 4% to 3%, which is quite a swift pullback. Today's report, we're looking to maybe tick back up to 3.3%. And that's kind of almost like symbolic of the fact that the journey from 3 or 3.3 back to 2% is going to be a relatively long and arduous one, and one that may not play out until possibly 2025 by some estimates. And when you take the overall Fed policy settings at the moment, even if they pause, things are going to get incrementally tighter. So throughout this cycle, we've heard central bank officials talk up the monetary transmission lag. We know that FOMC is winding down its balance sheet in the background, and as inflation falls, real yields will be moving higher. So if you kind of combine that with things like the Fed's Senior Loan Officer Survey, which has clearly shown that loan demand is falling, credit is tightening, then that does kind of provide this base case some ammunition that the Fed could potentially be done when it comes to hiking interest rates. And in fact, we've seen from comments from likes of FOMC's Bostic, who said the Fed could actually even be at the risk of over-tightening now. Yeah. So naturally, that does then pivot things to, okay, well, if we're going to pause, declare this terminal, when do we get rate cuts? And that's also a conversation which has been fueled by Fed Chair Powell himself. He's really made the point that the Fed is going to be cutting rates well before they get to 2%. And in terms of kind of like a quantifiable kind of historical comparison, typically it's around about 7 months when the Fed reaches terminal they start cutting interest rates. And in terms of market price, they're looking for the first rate cut somewhere between kind of March and May of next year. Yeah. So that's kind of the policy trajectory that we're on at the moment. The only thing that could potentially derail that, and is something which is concerned to the market, is actually how well the US economy has performed. So Q2 GDP was clearly firmer than expected. The labour market is holding up a lot better than expected. And if that has any follow through to wages, then naturally it's possible that inflation may have to follow thereafter. So that's really kind of challenging the thesis that the Fed could potentially be done. I think personally their bias at the moment is probably to kind of pause interest rates. But if they do have to come back to the table, they're going to want to see some real evidence that it is the wrong course of action they're taking in pausing, and to deliver their 25 basis points isn't a decision they'll necessarily take lightly, I kind of feel. Yeah. And I don't think that's a judgment they'll necessarily be able to make by the September meeting. I think if they are to hike rates, I actually think November is probably a more opportune time, because I think they're going to want to leave it a few months. And if they do hike in November, well, we've had hundreds of basis points worth of rate hikes thus far. What's an extra 25 basis points? Well, the thing is you got to bear in mind this will be pushing rate cuts into 2024 even further, and financial markets are going to need to reprice that. So that could be one of the main thematic issues for the second half of the year. So let's see how CPI report comes in today. If it's particularly strong, do we start seeing some of those 2024 rate cuts kind of scaled back? If you do see an unexpected drop, then does that kind of remove the possibility that the Fed could be hiking again later this year?
There's been a lot of rhetoric in the last year. Is it going to be a soft landing? Is it going to be a hard landing? Do you see recession as kind of in the rearview mirror now? Do you think there's still a potential chance of recession?
I think there's definitely a possibility, but I think the Fed's very cognizant of trying to protect the soft landing. I think as Fed's Goolsbee said, the golden path, and that's something which is very front of mind. I think if you look at an indicator such as the labour market, it's not really screaming recession. Yeah. I mean, technically a recession is always technically around the corner, and there can be greater macro impulses at play, but it's not something I necessarily see happening. And if it was to happen, a lot of people thought it'd be through the monetary policy channel, and we've seen the US economy kind of withstand a lot of the pressures thrown at it thus far. So I think soft landing is clearly the consensus at the moment.
Moving on to the ECB now. They hiked 25 basis points in July. Do you think they could potentially follow suit in September?
Yeah, so I think ultimately the ECB, they themselves don't know. So, it's hard for us to kind of really know. Yeah. But at the July meeting, we saw them remove the bias towards tightening. And that's very much with the view just to give them as much optionality as possible. But ultimately, like many other central banks, they're in data dependent mode at the moment. So, and just in terms of kind of what the data has been doing, clearly headline year-over-year inflation has been pulling back. That's pretty obvious.
Yeah.
The problem is that the core inflation, which is, strips out volatile components such as food, such as energy, that's really not playing ball, and that's very sticky at the moment. And then if you want to get a bit more technical, look at inflation expectations. One of the ECB's favourite measures is the five-year inflation forward, which basically measures inflation over a 5-year period in 5 years' time.
Yeah.
That's its highest level since 2010. So clearly, based on that alone, there is more work for the ECB to be doing. The problem is the increase in part of the market narrative over the past few weeks has been one of softening growth in the Eurozone.
Yeah.
And that's kind of difficult for many on the Governing Council to ignore, I'd argue. And so, yes, from an inflation standpoint, there's still work to do, but there's going to be a lot of people worried on the Governing Council about the growth prospects. And I think that's going to increase the divides on the Governing Council going forward. You're going to have the hawks at one end concerned about inflation, the doves more concerned about the growth outlook. And it's basically trying to balance the kind of the risks between these two and kind of try get a view as to how that battle will kind of play out. We had the August inflation report that's released on August 31st. I think that will be pivotal.
Yeah.
And, in terms of kind of interpreting that as a market participant, obviously, technically it's just a number on the screen. So you kind of need to know what the ECB's reaction function is. And I think it's not that clear at the moment. So my advice would be to not necessarily just think about the number, but think about, look at your calendars, see which ECB speakers are due on the docket. Because I think you're going to see a lot from the ECB in the speakers in the wake of that, trying to put a case there forward and give us a flavour of what to expect over that coming month. And, you really need to have a good idea of who the hawks are, who the doves are, where the balance of view lies. Because, I think it's a few weeks or maybe months ago now, we saw comments from ECB's Not, who's one of the more hawkish members of the Governing Council. And he's actually a lot less certain about the September hike, and we saw the euro move lower accordingly. So kind of having a good gauge of these things is really important. That's something at Newsquawk, which we help our clients navigate.
Yeah.
And then also as well, source reporting from the ECB. So when you get to ECB day, a lot of the time you kind of already know what's going to happen because someone at the ECB, whether it's a Governing Council member or some official at the bank, they'll ring their favourite journalist up and be like, we're going to do this, blah, blah, blah. And that's almost kind of like a trial balloon for the market to kind of, give them a flavour of what to expect, see how the market reacts. So, watch the inflation report, see how officials interpret it and see the source reporting. The one thing I would say is I think market pricing is very interesting for the ECB at the moment. So, yes, the growth prospects have clearly dimmed, but from an inflation standpoint, things really haven't turned for the ECB. And they're relying on the actual data to turn, not their forecasting, because like any other central bank, their forecasting round hasn't been great at all. So they're waiting for the actual data. And also the ECB, like other central banks, they were very slow on the uptake when inflation was rising. So from a credibility standpoint, they can't take the foot off the gas too early. And the September meeting, an interest rate hike is only priced at 40%. So if you get a hot inflation report, there's clearly a lot of room to reprice on that front. And that's the thing that people should be watching.
So the Bank of England raised rates again, another 25 basis points. Do you think this could be close to the peak rate, and how do you think that might play out for the rest of the year?
So just in terms of kind of how things have unfolded at the Bank of England, so we saw them step down at the last meeting to 25 basis points from 50 basis points. In terms of kind of what comes here, I think they're keeping their cards relatively close to their chest. Yeah. And I always feel with the Bank of England, their reaction function is quite difficult to read. I mean, at the last meeting, we saw a three-way split. Yeah. We saw one member wanted unchanged, two wanted 50 basis points, the remaining six, they wanted 25 basis points. And also for the Bank of England, you just don't hear as much for them, particularly in the summer months as well, and I'm sure they're on holiday, and you don't get much source reporting. So a lot of the time in the Bank of England, in comparison to, for example, the ECB, it does feel like you are flying blind a little bit. But in terms of what we do know from the last meeting, we know that they see policy as restrictive now. It's just a question of, do they see it as sufficiently restrictive? And that's the question for market participants going forward. Yeah. And interestingly, in the August press conference with the Governor Bailey, he kind of made this point that there's multiple paths to get inflation back to target. And that's basically a hat tip to the fact that there is a world in which the current rate is sufficient to get inflation back to target. Yeah. And, we saw in their accompanying macro projections for the August MPR, they see inflation below target in the medium term if the rates are held at current levels. The problem is, and it's a similar problem for other central banks, the forecasting has probably been bottom of the class, hence why they've needed to fly Ben Bernanke over to try and fix things for them, okay? Yeah. So, like other central banks, they're waiting for the actual data to turn. And, I think they've been burnt quite a few times. So they're not going to declare victory too early. So yeah. I think there probably is another rate hike to come in September, but the market's currently priced for 2 more 25 basis point hikes. I think that's probably one too many. I think the Bank of England have been begrudgingly hiking for a while. Yeah. If you move back to kind of May, we saw comments from Governor Bailey, Chief Economist Pill. They were talking about this monetary transmission lag for a while. They already says a lot of tightening in the pipeline. Since then, we've had 75 basis points worth of hikes. If you add another 25 in September, that gives you 100. So clearly, I think we're in territory now where they're growing a little bit uncomfortable, and therefore I think the market expectation of 225 basis point hikes is maybe one too many. Yeah. And I think you kind of need to think about the makeup of the UK economy as well. There's actually a really good piece by one of the MPC members, Saunders, who's making the point that relative to historic norms in the UK, fewer people have mortgages. And those people that are on mortgages, historically fewer have variable mortgages. A lot of people are on these kind of like short-term fixed deals for 2, 3, 5 years, etc. And what that means is it takes longer for these interest rate hikes to filter through to the economy. And therefore, it means that demand will be dampened for a longer period of time, given a set amount of interest rate hikes. And therefore, there's also a world in which the Bank of England, if they were to cut rates next year, policy still could actually be getting tighter, because those people who are then refinancing at higher rates, for them, things are getting tighter, even if the Bank of England is cutting rates. So I think these sort of factors are very much front of mind at the Bank of England. I feel like they'll have to probably do one more, but I think that's where they'll kind of declare terminal.
What's been going on with the Bank of Japan? And do you think this could be a potential beginning of a tightening cycle?
Short answer is no, but just in terms of context, what we've seen. So at the most recent meeting, they kept the broad parameters of their policy unchanged. Yeah. We saw this slight little tweak to the yield curve control element of their policy, which means they'll allow the 10-year yields to kind of move more flexibly above that 0.5% level. Yeah. So the market did react to that at the time, but the BOJ really made the point here. This is just an operational thing, and this is something to make monetary easing more sustainable. Yeah. And we saw BOJ Governor Ueda double down at the press conference. And he really made the point there's still a long way to go for the BOJ, because they want inflation stable around 2% and they want sustainable wage growth. And yes, in the short term, inflation is above target, but in the medium term, it's not projected to. And the BOJ are going to be very cautious in doing this. And that's why in the analyst community, they don't even see the BOJ making any further moves until April 2024. So I think those people who are looking for this to be the beginning of a tightening cycle, I think they're going to be relatively disappointed. And also as well, the BOJ, it's a very different policy journey they'll have to embark on. So they've got this yield curve control program. If they are to move towards hiking rates, they'll probably need to make a more formal tweak to that, the bands with which the 10-year yields can fluctuate. Yeah. They'll then need to ditch yield curve control altogether. They'll then need to wait, a period of say 6 months to see how the market kind of digests that, and then they can start hiking interest rates. And I'm very much a BOJ cynic. So if you take April 2024 as a proxy, what you got to ask yourself is, what's the rest of the world looking like at that point? Yeah. Are the BOJ, the perennially the dovish outlier when it comes to G10 central banking? Are we going to be in a world where the BOJ is hiking rates whilst the rest of the world is either at terminal or cutting rates? The cynic in me says that seems relatively unlikely, and I've always been relatively consistent in the view that the BOJ tightening policy is not going to be a linear process. There's going to be lots of stops and starts. So I'm very much in the no camp when it comes to, is this a tightening cycle for the BOJ?
Some absolutely brilliant insights there, Adam, so thank you very much. And don't forget to like and subscribe and join us next time.